$44,000 worth of implantable medical devices will be purchased in the US alone. Now, the crazy part of that is that $44,000 on top of that $350,000 will be wasted in the procurement process due to off-contract issues or pricing discrepancy issues. I've spent the last 5 years with hospitals looking at the supply chain, and you would be shocked with the issues that are going on. I'm Peder Sande. I'm the CEO of Orex Surgical, and I'm here to talk to you about the 12.5% invisible tax on medical devices that you never knew about. Orex lists that tax with an invoice network with hospital buyers and medical device suppliers that engage in a quick digital process that increases payment and speeds up payment. The reason that we're doing this right now is because of these sheets of paper with stickers slapped on them that kind of move around the back office of a hospital and don't really see the light of day and don't get paid for months. The reason that doesn't happen is because there's no way to quickly agree on an order and then process payment quickly. So we're going after basically a $1 billion market by charging 1% to suppliers on a $100 billion implant market. I'm Peder Sande. I just talked to you about a 12.5% invisible medical tax on devices. If you want to talk to me more, just reach out to me. See ya.
Thanks, Peder. Well done. And lastly, we have Hilary Pierce from Total Flow Cannula.
Hi. So thanks so much for having me today. I'm Hilary Pierce, CEO and co-founder of Total Flow Cannula, and we are an early stage medical device company with a product to eliminate injury and death caused by equipment used to keep patients alive when their heart and lungs stop working. So heart surgery and life support patients who need the support of an external heart and lung machine are actually unnecessarily injured by the equipment itself when the specialized tubing called cannula, which transfers blood from inside the patient to the machine and back, interrupts blood flow in their leg. The burden of cost of this problem is currently over $1 billion per year. And surgeons can't actually predict who will be affected, which means that every one of the 100,000 US patients annually need a solution. And we have one. So our cannula replaces the current device, which is causing the problem, and has additional novel patented features which ensure blood flow in a patient's leg. It's easy to use and has been designed by clinicians with over 50 years experience in the field and is in the hands of a team with a history of bringing medical devices to market. We're currently oversubscribed with a little room remaining on our 400,000 pre-seed financing. These funds will be used to test clinical prototypes, build and test clinical prototypes, and protect our patents in national filings. In becoming the standard of care, we aim to improve the length and quality of life for 100,000 US patients every year by eliminating the risk of injury and its billion-dollar costs in the US healthcare system by providing surgeons with an easy-to-use preventative solution. So please reach out if you'd like to know more about what we're doing or to join us in our mission to save these patients' limbs and lives. And thanks again.
Well, thanks, Hilary. And I got to say, you guys, all four of you, exceptionally well done. It takes a lot of courage to get up in front of a crowd like this and to pitch. You guys all did an exceptional job. Moving forward, one slide, Liz, we're going to just a reminder to everyone to keep the conversation going. Here's our social media tags. Oh,
hey, Joe, sorry to interrupt you, but Vantech and Thelzel are now here if we want to.
Oh, sure. Let's go back and do that.
Announcement.
Yeah, hi, everyone. How are you? I'm Thelzel Lee from Vantech, and I'm so sorry I'm a bit late. I had a hard time finding the link. It was buried in in the different emails in my inbox. I'm sure you guys can all relate, but I'm using up my 90 seconds. My 90 seconds is to tell you about the Vantech meeting that's happening on the 2nd of June. Once a year, we liaise up with the community members of the life sciences and health tech. We've got Nimbus Discovery who's sponsoring it, where we've got some good people at Life Science BC doing a presentation. And most important of all, we're featuring a lot of life science tech companies, and they'll all be presenting on that day. And take a look at your chat box, because the link to the Vantech meeting on June 2nd is in there. So you just have, if you haven't done so already, just click, sign up, register, and we're going to learn a lot about the life science industry in general, BC in particular, and all the hot new entrepreneurial ventures in this space on that day. Thank you.
Thank you, Thiesel, and thank you, Vantech. Okay, so moving along, Liz, on to the let's get social slide. Just a reminder for everyone to connect up through the VES various social networks. And all of the links are there. And now we'll move on to the next slide. And also just a reminder to introduce yourself on Slack. Okay, so now on to the main event. I'm going to pass things over to our moderator from Fasken, John Conlin. John, I think this is a pre-pandemic picture. Maybe you're catfishing us a bit here. I've seen you recently, and you're not looking that good anymore. And so take it away, John.
Gee, thanks, Joe. That's as warm as introduction as I've ever gotten. So thanks so much to the VEF, and excited to be participating today with such accomplished panelists who I will very shortly be turning this over to allow them to both introduce themselves and kick us off for what I expect to be a great conversation. And also great to see so many familiar faces and friends of our ecosystem. I want to welcome everybody here today on behalf of our whole tech team at Fasken. And I see many of my colleagues in attendance, and we're certainly proud to have the largest tech group in Western Canada with a long-standing dedication to supporting companies in the life sciences, from biotech, medical devices, digital health, and beyond. And it's really where health and technology meet that we have seen some of the most exciting and successful startups develop recently. Now, this topic can be intimidating in many ways. We could have easily spent on any number of subtopics: telemedicine, only devices, technology driven by big data, AI, or something that I know is on the top of the minds of many of the attendees who are entrepreneurs: how to secure capital to get to the stage where you can actually have a meaningful impact in this space with the problems you're trying to solve. But I think regardless of where this particular conversation takes us, the relevance of all of these areas has never been greater, owing in part to the ongoing pandemic, which obviously we're all living through, and which I know we all hope we're getting through soon. So without further ado, I think I'll turn it over to each of our panelists who you see up on the screen to briefly introduce themselves and who they are representing today. And I'll start with Bryan from LifeBooster.
Great, thanks, John. You are looking good, don't you worry. So I'm Bryan Statham. I'm the CEO of LifeBooster. We are a health and safety risk analytics company here in Vancouver. And we've developed a leading connected worker platform that we call SENS that utilizes wearable technologies to identify, understand, and prevent risks and exposures that cause injuries, illnesses, and death in the workplace. And we exist to ensure that all those essential workers that we know so well, who are behind the scenes, keeping our lights on, keeping us safe, delivering our packages, are getting home safe every day.
Thank you. Laurent?
Hi, I'm Laurent Pelissier, CEO of Clarius Mobile Health. We're a market leader in handheld ultrasound. We're trying to bring the power of medical imaging to more physicians and eventually into your homes. So Clarius got a large install base, many users, 35,000 users. We're 10,000 scanners around the world. We got the largest ultrasound imaging database around, and we are a leader in AI for ultrasound, and we're based in Vancouver. Thanks.
Thank you. Maryam?
Hello, everyone. It's a great pleasure to join you all today here. My name is Maryam. I'm the CEO and co-founder of MetaOptima. It's very nice to see many familiar faces. I miss you so much. And I remember my first presentation was actually at the VEF and Vantech when I started MetaOptima. So it reminded me of those days, and good luck to all the founders who pitched today. I could feel it, exactly my first presentation. So what we do, we have a platform AI powered for dermatology conditions. We serve all the way from patients, primary care, dermatologists, pharmacies, dermatopathology, dermatosurgery, and dermato-oncology and public health systems and HMOs. So we bring intelligence to serve patients who have skin, hair, and nail conditions, and we connect with EMRs, telemedicine partners, and other enterprise health systems. So good luck to all the companies who pitched today, and yeah, I'm glad to be here.
Perfect, thank you. And Paul Koros is going to send a VF t-shirt to anybody that can recite that word for word. And last, and Joe didn't tell me to put you last, Rich, but last and definitely not least, Rich from Telus.
Sure. Well, yeah, happy to be here, and I'm always excited to sort of come home and talk to people in Vancouver, because I spend a lot of my time virtually these days, obviously, but focused elsewhere. So it's great to be part of the community. I'm with Telus Ventures. Telus, for those of you who don't know, is one of the largest digital health companies in Canada. So I guess my perspective is, as an investor, prior to coming to Telus, I ran a health tech fund called Recap Health. So I think I've done about 40 digital health investments in Canada and the US in the last 10 years or so. Also, from an acquisitions perspective, our team drives a lot of our M&A in health. Locally, we bought Medisys and Coatman and a number of virtual care companies, and we're now in digital pharmacy, chronic disease, mental health. And then lastly, I guess maybe the perspective I have in a lot of this is kind of how to operationalize and scale kind of emerging technology. So some of you are in precision medicine. We have a local investment in a company called Genexus, and I think that's a big growth area. So how do you take kind of small teams building new technology and apply them across a broader geographic corporate footprint is another perspective. So nice to be here.
Thank you, Rich. And Rich, I'll start with you for the first question. And so I can't be accused of going off script right away. From where you sit, what are you seeing as far as trends in this area, not only now, but what predictions do you have as we are hopefully on the cusp in the next, 1 to 2 quarters of coming out of the pandemic?
Yeah, I mean, I think somebody alluded to it in the opening commentary. Like, one of the things I like about healthcare is this head in the heart, right? So intellectually or technically, however you approach the intersection of technology and a business problem, you can literally touch any area. You want to talk about AI, you want to talk about analytics, you want to talk about blockchain, you want to talk about genomics. I mean, you can literally go anywhere and look at the pace of change and kind of the excitement around that pace of change, not only the science, but the application. And it's a different game. I mean, we've probably come, pick your numbers, we've probably come 6 years in the last 12 months in terms of the adoption of change, the alignment of payer models, the urgency, the patient demand, the provider willingness, government reimbursement. I mean, all those things have just moved so far and so fast. So I don't think we're ever going back. I think we're in the new normal now and forever in terms of digital health specifically. And again, I'm a digital health tech, not a device and not really a drug discovery life sciences person. So I'll maybe restrict my comments to those. But I'm incredibly bullish. I look at across our portfolio, we've got about 25 digital health companies, personally and through ventures. And I would say the average quarterly growth is north of 20% in each one of those companies. We've now got 4 unicorns, from Series A, sort of sub $50 million valuations 3 years ago. We'll have, maybe half a dozen that will crest $1 billion in value here in the next 6 months. So value creation, pace of change, patient value, provider utility, like we're just firing on all cylinders. So it's an unbelievable time.
Thanks, Rich. I guess I'll turn it over to each of the 3 founders. To the extent that what was just identified overlaps with your businesses, is what you're seeing matching what Rich is seeing? Or why don't you speak and give the audience a bit of a perspective on your specific businesses and how you've come through COVID and what you think is going to happen towards the end of the year?
Awesome. I can start. And as Rich said, exactly what we have seen. I think technology adoption was pushed not only to hospitals, but also to patients' homes. we could actually more than double our recurring revenue in the last 12 months during pandemic, when we saw a big shift in telemedicine, in digitization that empowers AI. One of the major challenges in healthcare and AI systems was that you didn't have really good quality digital data to be able to extract insight and build AI-powered solution. But with virtual care, telemedicine, digitization was pushed. So you have to communicate digitally with your patients and document things to be able to provide your services, which means now you have a better infrastructure for AI. So that was also a big shift on our side that we saw. We had a very good trend in the US market, not only from enterprises and from payer providers and HMO side, but also from even community practitioners. And I think they were like jumping on finding the next concierge virtual practice they could build. And these are all different movements that could take us years to build before COVID-19, who could educate individual doctors to look for a platform that could be their virtual practice. COVID-19 pushed it for sure. And also, again, adoption of technology by patients and going to patient homes. Now we have a partner who's offering genomic tests, home kit solutions. This is a unique opportunity just pushed by COVID to patients' homes. And so these are like all the movements we have seen on the positive side of pandemic. But of course, there are a lot on the negative side that we can talk about too.
Absolutely. Bryan, what are you seeing?
Yeah, it's really interesting because the pandemic fundamentally changed health and safety within industry where we focus a lot of our efforts. And taking a very traditional industry, we're talking paper and pen, assessments being conducted on just a few individuals within a workplace, to now adopting technologies en masse. I mean, it's been an incredible shift. The momentum that has occurred in our industry, like Rich was saying, you know, we're probably looking at, and it's been expedited by about 3, 4, 5 years in terms of adoption for these types of technologies. So, I mean, the majority of us here on this this meeting here, we've got probably 90% of us are at home still. So health and safety in the workplace has had to change to get people back to work as quickly as possible and as safe as possible. And to do that, it's been digital health technologies, whether it's for identifying how close people are through social distancing or temperature checks, anything like that. So that started to create more of a snowball effect in terms of how executives are looking at health and safety within their own facilities and their own organizations globally, because they are now realizing the need to be more proactive, the need to be more preventative and provide that safe working environment. And so huge investments are being made right now into industrial health and safety, digital health. We're seeing that on our side as well. We're partnering with one of the largest advanced materials manufacturers in the world who are investing in us as well, which is a huge opportunity to effectively command this market, utilizing smart textiles to deliver health and safety to workers globally. So it's a massive change right now. We're really excited about it. And I think it's going to continue to progress, especially as we come out of COVID. You're going to see more and more or a larger transformation occurring within industry for health and safety.
Well, thank you. Makes a ton of sense. Laurent?
Yeah, so I think for us, the impact of COVID, I think a lot of my friends in medical devices have had difficulties. I think just the mere fact of not being able to demo systems in hospitals, things like that. For us, it's been quite different. In some ways, I consider ourselves lucky that basically two factors, like we're doing ultrasound, much miniaturized, so much smaller than your traditional ultrasound. And ultrasound is a very useful technology to diagnose pneumonia and basically monitor COVID symptoms. So interestingly, our market pre-COVID was primarily in clinics and private settings. And hospitals are pretty slow to adopt new medical device technologies. But in the case of COVID, there was a huge need for ultrasound, and then our solution turned out to be much easier to clean, to sterilize, like infection control, much better. And so we actually saw a significant growth of business in the hospital, which enabled us to experience growth this year, which we're thankful for. But yeah, and again, it's a momentum, like Rich mentioned, like forward 6 years, and we're not going back. Like people are just saying this is better, it's less expensive, it's easier. Like why go back? It just accelerated the adoption in our case of handheld ultrasound in hospitals. So it's yeah.
So absolutely. So I think what we're hearing from everybody on the panel is that there's a huge amount of momentum in the space, which I think naturally causes a lot of us to ask the question, so what's the state of the funding ecosystem like in this area in BC? What are you both as it is now, and what can we do to improve it? Rich, maybe I'll start with you, and then you can be attacked by all of the founders.
Well, let me predict what's going to happen here. I'm going to say it's better than it's been, and somebody is going to say it needs to get better. And then probably Joe will say it's mostly my fault. So that's what I think is going to happen. Look, I think globally, it's no secret, right? Like the markets, private, venture, angel, public are open, and SPACs, and I'm old enough to remember when $100 million investment was a big deal. I mean, you literally read in digital health or health broadly, multiple a day. So it is all systems go. I'll talk about BC in a sec. What I think the commensurate downside of that, though, is that the elevation, or maybe the disconnect now between those that are able to raise more capital and those that aren't, is growing, and that gulf is widening. And so the winners are getting bigger, and capital is almost unrestricted. And those that can't keep pace are ultimately, at the end of the day, falling behind, because all things being equal, more money is better. What I also see is a real transposition to platforms. So I can talk about that more later, but really at the end of the day, I think there's a recognition that, and again, digital health maybe more so than other areas, that employers or providers are just overwhelmed with the number of solutions being sold to them, and they need something, the one ring to rule them all, the operating system that then can bring in point solutions. And so you're seeing a real rotation, at least in my opinion, into companies that can credibly claim to be a platform that then aggregate and can run analytics and do some of that, sort of higher order processing on top of it. So, obviously we're trying to invest in those companies. Everybody says they're a platform when they start, but those that are able to prove momentum and the search for KPIs and data driven, when you have so much money out there, that really becomes a differentiator as well. So everything is trending to more analytics on evaluation, more analytics on performance, and then more on the platform value. I think in BC, it's all of that, but shrunk. Like it's, you're not getting the $100 million rounds, but you're getting more significant sized rounds. We did a $30 million round just recently in pocket pills. That was one of the bigger rounds, digital health. There are multiple examples like that, but it's a small N. And I see a lot more at the early and seed stage level in BC, where the company is really a bet on the founder and their recognition of the pain point rather than any demonstrated momentum. As the demonstrated momentum increases, they become, I think, targets for investors from around the world. And that capital, given the virtual first, COVID thing, is flowing more freely. So less friction once you get traction, more friction before traction. And, that's frankly, I think that's a BC problem, regardless of whether you're talking about health or something else.
Right. Laurent, I'll give you the floor first for your perspective.
Yeah, I would kind of second this. I was thinking about, what I thought this question would come up and what to say. I think VCs, from my experience and from, previous company, Ultrasonics, and now, has been great, like for seed Series A. I think there's a good level of interest in general, and funds available for small companies like seed Series A, and I would say when it gets to growth round, from my experience, again, I have it's not like I've done like 10 companies, but from the experience I have from Clarius and the previous company, as soon as you start to go past like growth round, like past 20-30 million, I think it's just more, there's just more capital, at least down in the US. And so, but that's probably just a fact of life. And for me personally, like we're in medical device, so it's like, even though we're opening up to an ecosystem and creating connected devices, we still, especially in the early days, like labeled hardware, medical device, so it's even more niche. And the bigger players are definitely in the US. But otherwise, I think in BC, like from like angel and venture funds, I think we have good ecosystem. We can still do better, but it's not bad at all.
Yeah, Bryan, what about you?
Yeah, I mean, this is my first company. So to say that raising money was not difficult, it would be a lie, because it's challenging. And to be honest, the majority of our investors are here in BC, and they have supported us through some of the hardest times. Maryam, you're talking about some challenges with COVID. When it first hit, companies weren't buying, they were stopping. So we were in a really tough place, and our existing investors and some new investors came in and really supported us, like Nimbus Synergies. And so we've been able to really grow a great ecosystem around us of support, which has been fantastic. And then, to be honest, having people close by has been great as well. We have investors out in Finland, and now we're doing this investment round with a group down in the United States. So we're starting to expand as we're starting to hit, growth capital. So I haven't had the experience of raising in Vancouver more growth capital, so can't really speak to that right off the bat. But from those that I've met and spoken with, the willingness to get in and support and take risk has been fantastic. And so from my limited experience in BC, it has been fantastic with great support. So
that's great. Maryam, how has MetaOptima's experience been?
This is also my first business, and I only have the MetaOptima experience. But I think for all of the rounds, angel, seed, Series A, and now that we are closing our Series B, my experience was that we had more interest always from outside Canada, and BC is also like, much smaller compared to even the opportunities we had from Montreal and Toronto. So I don't know if it was a type of business or timing or what, but the Series A experience that we had was unique. Our Australian investors came to Vancouver, gave us the same day offer, closed it in 3 days. And it was pretty unique. And thanks, Jonathan, to you and your team being part of that process and making it very, very efficient. So I don't know, not to the best of my knowledge, I don't know any Canadian company having that experience in Canada, that you can have that, same day financing experience. It wasn't easy, as Bryan said. We've been talking to many investors, definitely going through the process. But when you get all the interest from outside of Canada and outside of BC, and there's a challenging space here, then you have no other choice, other than accepting those investments, and you keep losing Canadian ownership, which was a topic for one of my major meetings with some of our amazing programs who have supported Canadian innovation, that we keep losing Canadian ownership in the companies who are receiving investment. Very fast, quick decisions from investors. Even for our Series B, some of you here, we've talked about this, and I will follow up with you as soon as the term sheet is signed and finalized, if there is room for follow-on or participation. But again, we have offers outside of Canada for our Series B. So this is again happening. I think we have a really good ecosystem, support ecosystem, but not funding ecosystem. I've had amazing introductions, warm introductions to investors outside of Canada from the Canadian advisors trying to help companies, but they didn't have enough fund to fund Series B. They told me we would love to do this, but our fund is very small. and we cannot do that. So I think there is definitely a need for more growth investments in Canadian companies.
Well, thank you. That's a unique perspective. I think, that gives us a kind of a diverse set of viewpoints on, let's call it the middle of the life cycle. But, in thinking about some of our participants who are sitting here starting companies that are closer to day one, what advice would you give those startups in these spaces, and in part, with your own learnings as you've grown companies, or Rich is obviously an investor in many. And maybe I'll start with Bryan for that.
Sure. So for me, one of the biggest things was practice, get out there and test my pitching capabilities, and really staying true to what I believed in terms of the company opportunity. 5 years ago, you'd probably think that health and safety and digital health and safety wasn't going to be a big thing, but now it's one of the fastest growing markets. And so I ran the gamut. I went through Angel Forum and Vantech, and I think I did also do a pitch with VEF a few years ago, and getting connected to the right people. I would say utilize your network as much as possible to get connections, because any meeting that you do have, it'll probably lead into another opportunity to pitch to investors. I do find the angel community has been very supportive for our business here in Vancouver, and so leverage that. And even if you're not getting financing through the likes of the angel forums and things, events like that, there will be introductions that do come from it, and great advice and mentorship as well. So yeah, I would stick to your guns on that. And then when it comes to reaching out to VCs, warm introductions are definitely the best. And again, leverage that network. That's the biggest benefit for me through raising money in the Vancouver ecosystem.
Right. Maryam, what advice would you give people just starting out right now?
What I've learned, and the most valuable lesson is, as Bryan said, don't underestimate your social capital. It can be more important than your financial capital, because people make things happen. So that's one. The other thing is, don't give up. If you think the deal is not right, don't accept it. You will see it will pay back big time. My hardest decision in business was rejecting an offer for 3 million euros 6 months before we closed our Series A. And I was under a lot of pressure to accept it. And I knew it was not the right decision. We needed that money so badly. I'm sure you all know. But decided not to do that. It probably had the biggest impact on my mental health back then. But you survive, you get stronger, and you just know that if it's not the right decision, don't take it. Don't think you're cornered. You can make things happen. This is like part of being an entrepreneur. And just fight for that big vision. And if you're not part of that big vision, it won't happen. So dilution is important, not because of ownership or financial outcome, because of the impact you will have in that driver's seat. If you lose that, your vision will be lost, because others won't fight for what you want to dream and you want to make happen. So that is one of the biggest things I've learned. And it's not about the financial outcome, I think, at least in this first business for me, but definitely having that drive and passion and that dedication that you will be there difficult days, no matter what happens. You will find a way to make it happen. But others, you cannot expect them to do that, and they won't do that. So yeah, don't doubt. If you think it's not the right choice, don't go with it.
I think that's very valuable. Laurent, anything to add to what's been said already?
Yeah, no, I think just that's more my personal experience. Like I think early on, through try to network, and I think what worked better, depending on the stage of your company, that's probably pretty obvious, but early on, I don't know, I see younger entrepreneurs going straight to venture funds, and trying to raise larger amounts. I don't know, like from my experience, it was like, you know, find a strong angel can help, and then introduce you to other angels, and just go slowly like this. And then when you're ready, talk to venture funds. That's maybe my, you know, at least that's my experience, that kind of work, but you know, it could be different for everyone. So, and yeah, don't take a deal you don't feel is right. That's for sure.
And Rich, final word on recommendations to first-time or startup founders.
Yeah, and I've been on the other side of the table, and trust me, I know venture people and sometimes angels are annoying and they ask a lot of dumb questions. So don't think that your experience is unusual if that's what you're facing as an entrepreneur. I guess what's maybe insightful from this side of the table is what we're not really listening to. And in my case, and I think a lot of VCs like myself are not really paying that much attention to, is your product, you know, kind of your initial customer traction, your advisory board. None of that stuff really matters, because in the early stages, the assumptions that certainly I make are you're not going to end up where you started, not even close. Your product's probably not going to work the way you think it is. Your customers aren't really going to pay what you think they're going to pay. Your market's not really going to materialize the way you think it's going to materialize. The channel partners that you think are there aren't really going to be there. So everything is going to change. And so the only thing that matters to me are one is, how well do you communicate? Like, can you tell a good story? Because everything from recruiting to selling to fundraising, storytelling, like that is, if you ask a question and the person's still talking 10 minutes later, like I'm doing, then it's a problem. Like, crisp, clear, know your problem. The other thing I really, it's amazing, is people who learn from meeting to meeting, people who think deeply, they assimilate what you told them. They bring 3 or 4 perspectives, they distill it down, they go, this is my thesis, what do you think? You know, and you can just see the wheels turning. Those are the people who will be successful, because they learn better and they learn faster. And so if you're at the stage where you have no metrics and you can't point to sequential quarter or monthly growth that somebody could plot and go, okay, I can see a business, and it's just gut, then you got to communicate on those elements rather than anything else. And then I agree with everything everybody said around, you know, go with people that your gut tells you can partner and live with, because you're going to be together for a while.
Thank you for that. I'm just going to pause here. I don't believe we've gotten any questions yet from the audience, and I just wanted to make the point that we very much want this to be interactive, and feel free to ask any questions. Joe will pick them up in the chat box and pass them on to me, and we definitely want to make time for any questions that anybody has that are pressing. Just want to make that point. When we dive back in, you know, when you're talking about ecosystem, and I want to bring this to more of a British Columbia focus on this particular question. You know, one of the things that I always think about is how our government is supporting us. You know, what has your experience been with respect to, you know, and this doesn't have to be a COVID question, but how our ecosystem is from the support we get from government, and how that has factored into your own success, and what recommendations you might have for how we can improve that side of the support system for companies. And start with Maryam.
Yeah, I was going to volunteer. We have an amazing ecosystem in Canada for supporting innovation in digital health and AI. I can talk about that part for sure. We are an example of, I think, our Canadian excellence in investment in AI and what we do in our domain. Again, there are many other areas, basic science and other things that we need more investment for sure. But I'm talking about taking a research project from a lab to a prototype, help with building the product, help with exporting the product, help with showcasing the product in international conferences, help with closing contracts globally, help with payments if they are delayed from your global partners. These are amazing programs. They're small, but when you start, you need every single dollar that you can get this supported. So for us, we had $4,000 soft landing program for our meetings with New Zealand hospitals. We closed that contract. We had some soft landing. We had Can Export program that supported our expansion in Australia. Now we have 6 employees. We have our biggest customer from the US that actually was only possible because we had this showcase event in one of the conferences supported by Can Export. We have amazing projects done with the IRAP support. On top of that, you add SHRED, tax credit that we have in Canada. So I think as entrepreneurs and scientists, I have no excuse. Honestly, I have no excuse to say I don't have resources for innovation in Canada, at least in our case. I'm not talking for other companies. I know they may not have the same expertise. Like I write our grants myself. I stay 3 nights, in the office. I write a grant for 1.3 million and it's accepted because it's pure AI and IP and I know exactly what we are doing, right? So we have that expertise and we are really successful in getting that support. That is unique. I haven't seen in Australia, I haven't seen in the US, and that's perfect. But when it comes to commercialization, when it comes to scaling to the next stage, that's where we need support. But in terms of the ecosystem for innovation, it's fantastic. And actually, we hit 1.5 million patients. We passed 1 million in August. We hit 1.5 million end of 2020, and we've had over 5.5 million cases. Why do you think we could do this as a small company? Because we could build the best AI product with the innovation support that we had in Canada. So these are, again, this is one example. I don't want to generalize this and say, oh, we have enough programs, we don't need more, we need more, please. Can keep supporting Canadian companies. And also I just want to go a little bit more back and look at our immigration programs. I came to Canada as an international student, graduated from a Canadian university, trained here, started a business. So this is really showing that opportunity land that we talk about, right? So yeah, I'm grateful. From our side, yeah, many difficult days. Of course, as an entrepreneur, you're subscribed to it. You cannot complain. But amazing support programs in Canada. And that's why I think we should keep our Canadian innovation Canadian and make it $1 billion business. We shouldn't lose it to the friends down the border.
Bryan or Laurent?
Yeah, I mean, Maryam, you nailed it. There's such a great support ecosystem for non-dilutive funding across Canada. And we've definitely leveraged that primarily through IRAP. But there's also great programs on the investment side where if you're an eligible business corporation, you provide your investors with a potential 30% tax credit, which is also a way to get people interested in investing in your business. And so we were able to leverage that as well. And so from our perspective, everything from youth employment programs where, youth is under the age of 30, and we've got some incredible talent. Some of our most impressive minds on our team have come and we've utilized the youth employment program through IRAP. And so I think overall, just understanding where to get that money and how to access that, that's the most important thing. So maybe for me, I've got great mentors who have opened the doors for a lot of that funding, but maybe more marketing or access for new entrepreneurs, understanding where to get that, it would be important because sometimes it's a bit of a convoluted process to go through for your first time. So there's different groups like Granted who will help out with some of those grant programs. I mean, there's great opportunities out there to leverage the capital to help fund innovation. So I think I totally agree, Maryam. Like everything from BC to across Canada, they've done a fantastic job.
Laurent, how about you?
Same. I would say I think the the program that had the most financial impact, like in my previous business and Clarius, has been SHRED because it's simple and it's federal, but I think this is great support. And otherwise, yeah, like IRAP early on and like on growth, I think this new program, not new, but Western diversification plan, like this is actually supporting non-R&D expenditures. So that's been great. And then initiatives like Supercluster, I don't know, like we were involved in the local, and these things are great. I mean, the fact that you have, the ability to get enough groups together like this and do complex initiatives to deploy like ultrasound, like we're in this program to deploy ultrasound in rural areas in BC and improve patient care, and get this funding to start these programs that have commercial potential, like eventually in and improve BC's economy and everything. Yeah, I think like we're very well served in all these programs. So like 10 out of 10.
Can I just add one other lens on this, which is, I think, I mean, I agree with everything that's been said. All these programs are great. I think government can play a different role, which is a payer. In the U.S., a lot of shareholder value and patient value has been created through value-based care and outcomes-based financings, right? We have a different system in Canada, not to get into all the social issues, but ultimately there are precedents starting to pop up with things like social impact bonds, in which you pay basically for an intervention. Let's say it's reducing hypertension. We did one with heart and stroke, where you're paying and incenting some vendors to come up with a creative system and technology that then saves downstream admissions, as an example. Well, system wins, patient wins, vendor wins, government wins. I mean, if we can get out of our political sort of fixation around this notion that we have a public healthcare system, which we don't, we have a hybrid like everywhere else, we could maybe transition and have much more of a, government as an incentive provider, which would then foster all this innovation. And the other element I would say is, the question is, broadly speaking, how do we unlock more capital that may not target the same rates of return as, say, greedy VCs? Well, philanthropic capital, foundations, endowments, a lot of those will be very happy with lower rates of return, assuming there's a relatively low degree of risk, which in a lot of healthcare, initiatives and endeavors, that's actually the equation. You're never going to scale dramatically, but you've got a fairly decent, especially if it's a services-led implementation, you've got a residual business or a business that can survive. So why don't we, this isn't an overnight thing, but why don't we create more incentives to get foundations and hospital endowments and school, university endowments deploying more capital in the healthcare sector? Because at the end of the day, a lot of donors now are saying, I don't want to fund an MRI machine. I want to fund an actual in the field entrepreneurial innovation that affects lives, domestically or internationally. And it feels like we're nibbling away at the edges of that, but not really moving whole hog. So I think that's a whole other area government can and should be playing.
Anybody else have anything to add to that? Very well said.
I like what Rich just, sorry, go ahead. I like what you just said, Rich, about donations and trying to regroup and help fund companies this way. Sorry, Maryam.
Yeah, I also want to add the programs that actually will support more continuous forward-looking growth and sustainability for businesses in Canada to succeed. I don't think like short-term injection of cash will help companies, but like really having programs that you graduate from one to another. So now you are established, you show the return. One of the reasons many companies don't apply for these programs is the extensive reporting requirements, which is good. If you really need that money, you will do the work and you will report back how much you've paid in taxes, how many jobs you've created. Those are all, I think, good steps to make sure that companies graduating to the next stage will get more support and they will establish a better business. And one of those, as Laurent mentioned, supercluster, I think was really, really key for our project and the partners I know in our project during pandemic, which was exactly the time we were fighting for our home care solution in a different front, but that was really, really key. And MyTax, we shouldn't forget about that. MyTax was one of the foundations, built MetaOptima. We started with our students, kept them, hired them, and then they are like our R&D manager now. And this is an amazing program. We don't have really similar programs in other countries that I know. So we can name many, but these two are also, I think, important that can help with that. Investment, partnership, future commercialization, and further growth down the road, not just short-term injection of cash.
Absolutely. Well, I see we only have 1 minute left. So I thought I would bring us full circle, one sentence each. predictions 2022 and beyond. And I'll go with Rich first.
Sorry, they're trying to read and listen at the same time. What was the predictions for 2022? Is that the
2022 and beyond, one prediction each.
Valuations in half, innovation doubled.
Maryam?
I'm very, very hopeful for AI with the digitization that we see in the healthcare system. I think AI will change the way we manage our healthcare system, we coordinate care for patients, and we will see new implementations of AI. When you talk about AI, everyone is looking at like diagnostics. I'm not thinking about diagnostics. I'm using AI in the back end of our healthcare systems because now we are digital, much more than what we had before.
Laurent?
Yes, I would say, combination again, AI and sensors into the, eventually into the homes, improving patient health. Like this is what I would see happen, maybe not in 2022, but over the next 5 to 10 years, yeah, it's gonna change.
Bryan, finish us strong.
Oh man. Embedded systems and smart textiles alongside AI, I think is going to be a huge trend that we're going to see in our everyday life, both from medical, from the hospital to the home and the workplace as well.
Thank you. Well, that concludes this portion of our panel. Thank you so much to all of our panelists for taking time out of your extremely busy days. I know I speak on behalf of everybody in attendance when I say, how much we got out of your insights and how much we appreciate you taking the time to do this. Joe, I think this is the point when I turn it back over to you.
So thanks so much, John. Just on a personal note, I know how busy John was this week, and I know we moved heaven and earth to put this panel together and get it ready. So great job, John, as always. And thanks to our friends at Fasken who do such a great job for the tech community. And for our panelists, it's not lost on anyone, I hope, you guys, to get CEOs and in your case, Rich, someone running a massive fund out here to support the community at large. It means the world to all of us. So thank you so much to all. Liz, have you got the VEF? I just want to announce the next event on the slate is the very topical cybersecurity event that we're going to run on June 22nd. So we're encouraging folks on the line and in your networks, text it out, tweet it out, send it out on Facebook. Would love to see everyone here for that event. And before we move to the virtual, we're going to move next to the virtual networking session. Liz and Angie have done a great job, I think, of putting everyone into a room so you can have a look around. You can leave rooms, join new rooms. The panelists are all going to stay around, we hope, for a couple of minutes anyways. One room will be open discussion, but I think the panelists have laid the groundwork for a fun and really entertaining and intelligent conversation that might be going on in one of the 5 breakout rooms. And so lastly, I'll just shut it down on behalf of the VEF. It was great for all of you to come out. Super appreciated. Hope to see you again in June and at the events afterwards. I see many of the board members are here. So thank you to Paul and crew for joining us, and go out and enjoy what looks like a lovely evening here in Vancouver. We all hope you have a happy and profitable and enjoyable time forward with your ventures, everyone. This is Joe signing off.
All right, thank you, Joe. So the voice you hear right now is Angie from the VEF board in New Ventures, BC. We're about to open breakout rooms for networking. Once they're open, you'll see there's a room for each panelist titled, so you can go to that room if you want to connect with that speaker. If you don't want to network, you can of course exit now. And you do have the option to move rooms as you go. So the instructions are right here. Basically, you have to go to the breakout room button, then you have to find the room you want to go to, and then you want to focus on this little thing on the side where it will change to join, and that's how you move rooms if you want to move. So otherwise, I'm gonna open the rooms right now and enjoy.